Hey everybody, welcome to Stock Abilities. Today I'm going to be covering dividend stocks and the potential benefits as compared to investing in other types of equities, and we're going to jump right into it. For those that are stock market beginners, a dividend is payment made by a corporation to its shareholders in the form of cash, called cash dividends or stock dividends, as it reads on here. Essentially, they pay out the excess of whatever extra profits they're getting to the shareholders. So if you hold on to a stock, you can actually make money on the stock itself, plus the dividends that are paid out. Some are good, some are not. Kind of depends on what the stock is, what the company does. For example, insurance companies or any kind of membership related companies that have a continual flow and kind of a subscription basis that goes up and up and up, whether it's for phones or whether it's for a service. Those excess profits can then get a percentage sent to you through the dividend. There's also special dividends. I cover that in another video, which you can check out in the link below here in the description. If you want to hear more about dividends, other stocks like that, so on and so forth, make sure to like, subscribe to the channel and share this video. Going in a little bit here, a lot of people recommend the Apple stock. I personally am not a big fan. However, the dividend isn't too terrible. It's been getting roughed up lately, and they got some medical stuff coming out here into next year and the next few years, so on. And it's looking kind of promising. It's not really new news, but it's news pushing away from the iPhone disaster with China and some of the restrictions that they're having recently. Dividends been 73, 63, so on and so forth. It's been going up since 2013, and then in 2014 it took a big drastic dump. And then in 2015 and 2017, 18, so forth, it's slowly going back up. The problem is that in order to get the full dividend, you got to be buying shares at $169 a share, and with an only cash amount 73 cents basically per share, that is not very much as compared to some other dividend stocks, which I'll be getting into. This is just Finviz here, nothing too exciting. You got the dividend yield positive, and you got a uptrending channel. So you can see a lot of different stocks that are pretty easy to invest in, and some of them are much less costly than you'll get from Apple. Show some examples here. Now this is only half the cost of Apple, but the dividend is actually almost better. You got the dividend of 46 cents a share, but you're only paying 86 as compared to the 160 per share that you're paying for Apple currently. Now, the difference is pretty substantial. You're paying less, you're risking less capital, and you're making potentially a little bit more, because if you buy 2 shares, you're getting a slightly higher dividend. Going a little bit further here, you got the First Energy. This one's even better. You got a 38 cents a share dividend. It's been going up since 2014, 2013. It was down from that, but from 2014, it's been pretty stable. Hasn't really went up significantly. However, the value for that, assuming that you want to project that it stays relatively the same, it doesn't go up a lot. The risk is, of course, less, but the problem is that the amount is kind of volatile because it is a gas company. The point being, though, is that the dividend is 38 cents a share, and you only pay $39, whereas with Apple it was, I believe, around $70, $80. I mean, 70, 80 cents a share, whereas it's only 38 cents a share here, but you can buy 40, 80, 120, 160. You can buy 4 shares, so you're going to get a better dividend yield for the 4 shares that you hold compared to the 4 shares you'll hold in Apple, and you'll pay significantly less. It's not necessarily one that you're going to see uptrending too much, or you're going to see a bigger cash flow going into the future, but it's a stable dividend. Just another example, Capital Southwest Corporation, dividend date and history. the 46.89. It's kind of all over the place here, but overall it's been gradually going up, and once again fairly cheap, only $21 a share, and you get 46 cents per share for the dividend. So you're only paying $20, but you're getting almost less than half of the dividend that you'd get from Apple, but you're only paying $20 as compared to the $160, $170 a share that you have to pay to get the dividend for Apple. Aflac, I recommended at the beginning of the video that insurance companies are a good investment, at least for dividends wise. Now they've been going down into this year, but since 2013 they've been gradually going up. It took a little bit of a hit, but it's going to be bouncing back up, so this is a good time to get into stocks like Aflac, simply because of the dip in the pricing, and it's an uptrending stock, which is also a good thing. You got CVR Energy, once again pretty substantial dividends. They were actually paying as much as Apple was, but for only $37 a share and nearly 75 cents per dividend, which comparably to Apple, which is about 70-80 cents dividend per share dividend. It's a big difference. You got the $37 you can pay for pretty much very similar dividend, or you can pay Apple's $160, $170 and get a similar dividend. Now it jumps around, but since 2013 it's been pretty consistent. You got the 75 cents, and then in 2015 you got the 50 cents, and then 2016, 2017, 50 cents, and then 2018 again 75 cents. Might be seeing 50 to 75 again into the following year, and you're paying way less money. You're only buying it for 37 a share as compared to Apple's 170. Now you got that was the channeling uptrend, and now these are just stocks and or ETFs, what may have you, that are trending in a specific limitation here of a given channel, whether it's a channeling up, channeling down. You want to look at the 5-year charts on these. Some are stable, some are not, but this is more of a broad channel that kind of stays in a specific range, and it's up to you whether you want to invest in them. But the more broad range 5-year trends that are pretty solid, stable, they result in more stable dividends, but also a lot less rewards. So these are not as risky necessarily, but they're not going to be as profitable either. Jump into some of these here. This is $35 a share, and you get a 20-cent dividend, and that's not too terrible considering the price tag. And once again, this is actually a better dividend than Apple pays out if you add up these shares, because if you get 35, 30, 60, 90, 120, 150, 180, you get about 5 to 6 shares, and 5 to 6 shares, that's 20, 40, 60, 80, 100, or $1.20. So between $1 and $1.20 for the equivalent of what you'd get buying one share with Apple. And Apple only pays about 70, so you get almost a double per dividend, and you actually risk less capital. And going a little bit further, this one's a fairly good one as well. It's only $14 a share and a 30-cent dividend. That's significantly better than that of Apple, and it's been having a nice trend. It did dip a little bit, but then it's been going back up since that point. 25, 26, as you can see, you're not going to see a big jump, but you're going to see huge returns on your dividends simply because you're paying $14 a share compared to the $160 with Apple. This is TDEV's 5-year chart. As you can see, it's been pretty healthy since 2013, and it has a nice little uptrend going on. And although it did dip a little bit in September, October, it rose a little, and then it's kind of been bouncing around, dipping more in October, and then November and this December it's been kind of solid stale. It's a pretty good dividend stock if you want some easy money without a whole lot of risk. You got the Ares Management Corporation, which I showed dividends for too. Fairly stable chart, even looking at the 1 year, the 5-year. there's been some drops, but if you're holding it as a dividend stock, that doesn't really matter too much in a multi-year scale. If you want more videos like this, make sure to check out the Discord, subscribe to the channel, all that fun stuff. Have a nice day, and thanks for stopping by.